All right, let's dive into ONGC's latest investor briefing. Now, you'd think it's a tough market for oil producers, right? But the numbers, well, they tell a surprisingly different story. It's one of resilience and really smart execution. So let's get into it. Okay, so this is the number that really got everyone talking. A 23% year-on-year jump in consolidated net profit. Now think about that. In a world where global crude prices are falling, a surge like this, it just doesn't happen by accident. We've got to take a much closer look. And this right here, this frames the central puzzle for anyone looking at this company. The price ONG actually got for its oil dropped from over $72 a barrel last year to just over 61 this quarter. So the billion-dollar question is, how on earth did they not only survive that, but actually boost their profits? To answer that, we've got to look under the hood. Go beyond those headline numbers and see the financial mechanics at play. This wasn't some magic bullet. It was a whole combination of savvy financial moves and some serious operational discipline that painted this rosy picture. Now, this table is super interesting because it really dissects the whole revenue story for us. You see the hit from crude oil, just as you'd expect, a drop of over 2,000 crores. But look over at natural gas. Revenue is up by over 500 crores. This boost, which came from getting more gas out of new wells, basically acted as a giant shock absorber. But, it wasn't just the gas revenue. Those lower crude prices had a weird silver lining, a nearly 10% drop in things like royalties and taxes. That's direct cash savings. On top of that, they kept their operating costs flat, which is amazing in this inflationary environment, and their subsidiaries like HPCL and MRPL did great. It's all these layers working together that really built up the profit. Okay, solid financials are one thing, but for a company like ONGC, it all comes back to what they're actually pulling out of the ground. So let's take a look at the real core of their business, production. And this right here is a classic problem in the oil and gas world. Mumbai High is a legendary field, a real giant, but it's old and its natural production has been slowly declining for years. So the critical question for the folks in charge has been, how do you stop the bleeding? And even better, could you actually turn it around? Well, their answer was to bring in a technical partner, British Petroleum. And wow, the results are already speaking for themselves. They haven't just stopped the decline. They've actually pushed production above their baseline projections. Last quarter, output was a full 7% higher than they thought it would be. That is a massive win for stabilizing their most important asset. So, building on that newfound stability, ONGC has set a pretty ambitious target for the next fiscal year, FY27. They're aiming for 42.5 million tons of oil equivalent. That's oil and gas combined. A number like that, it signals some real confidence that their new projects and these revived older fields are ready to deliver some serious growth. Which brings us to the future. A stable base is great, but long-term growth? That's fueled by brand new, major projects. And ONGC has a huge pipeline. We're talking over 20 projects with a price tag of around 77,000 crores that are happening right now.
And the absolute crown jewel of that pipeline has to be the KG98/2 project. This isn't just another project. This is a strategic national asset. It's absolutely crucial for the company's future and, frankly, for the country's future natural gas supply.
And after a few delays, the momentum here is real. You can just walk through the progress. The big physical stuff, the platforms, the living quarters, they're fully installed and secured. The super complex work under the sea is almost done. And now they're moving to the final critical phase, hooking up the 26 wells that they've already drilled. And here it is, the timeline every investor has been waiting for. First gas is expected to start flowing in the very next quarter. From there, production will ramp up steadily, and by the end of fiscal year 27, it should hit a really significant 5 to 6 million standard cubic meters per day. That is a tangible schedule for a massive new revenue stream. But hey, it's not all about KG98/2. The Daman Upside project is also about to start producing gas next month, and that'll add another 4 to 5 MMSCMD. And over in their petrochemicals business, their Opal subsidiary has finally stabilized running at a really healthy 92% capacity. They're already looking at future growth. Okay, let's totally shift gears now. Let's move from the traditional oil and gas stuff to the long-term vision. Just like every other major energy company, ONGC is looking to the future, a greener future, and they've actually laid out a pretty ambitious plan to get there. And the big headline number for that vision? 10 gigawatts. That is the renewable energy capacity ONGC is targeting by 2030. That's a huge statement that they're serious about becoming a truly diversified energy company. So the big question is, how are they gonna get there? Well, it's basically a two-pronged strategy. First, they're looking to buy existing renewable projects to get big fast. Second, they're building their own from scratch, like a 300-megawatt solar project they have in the works. And what's really smart is they're also going to use this green power themselves, which cuts their carbon footprint and their operating costs. At the end of the day, though, for any company on the stock market, all of this performance, it has to translate into value for the shareholders. So after looking at the profits, the projects, and the plans, we're back to the big question. What is the payoff for investors? And the answer, in a very big way, comes down to this number right here. Over 15,000 crore rupees, that is the total cash ONGC has paid out in interim dividends just this financial year. That is a direct return of capital to the people who own the company. And you can bet management is making sure everyone hears this message, loud and clear. This quote from the director of finance calls it a historic milestone. It's more than just words, it's a powerful signal of confidence. They're using a record-breaking payout to tell the market, we believe in our financial health and our future profits. So when you boil it all down, the story of ONGC right now is all about this delicate balancing act. On one hand, they are squeezing every last drop of value out of their old assets. And on the other, they're pouring massive amounts of money into these huge projects that will fuel their future, in both oil and gas and in renewables. Which really leaves us with this final big picture question. All the pieces are definitely moving into place. The turnaround at Mumbai High is the stable foundation, and projects like KG 98/2 are the massive pillars for a new era.